like tax.
Thank you all very much for joining us at this joint event by the CPS and Tax Policy Associates. Just a quick moment of housekeeping. You will find a variety of CPS reports on your seats. Please exchange them with your neighbours like Pokemon cards, so collect them all by the end of the evening. And also a flyer for a new programme we're launching called the Thatcher Fellowships, which is about trying to encourage people from business to get into politics in the way that Dan has done extremely successfully.
Oh, crikey.
And, but no, so the reason we're here today is that people can have lots of different views on how much tax we should be collecting in this country. But one thing which isn't talked about as much and has been a real focus of the CPS's work and Dan's work at TPA is how we collect tax, and in particular the fact that at various points in the British tax system, we can do without the mics if this is okay. At various points in the British tax system, things go slightly crazy and it doesn't actually pay you to work. And that happens at the lowest end of the spectrum and it happens at the highest end of the spectrum. It happens to families, it happens to people on welfare. It's a real problem. So today we're hoping to dig into that and highlight what the really least fair bits of the tax system are, how much the recent budget did to fix them, and what should be the priorities for any government going forward to build a fairer and more rational tax system. And we have an utterly fantastic panel to do that. We have Richard Hughes, who is the head of the Office for Budget Responsibility and is very relieved not to be talking about the budget. We have Suping Chan, economics editor at the Telegraph. We have Stuart Adam from the Institute for Fiscal Studies. And we have Dan Neidle from Tax Policy Associates, who's going to start by telling us all a bit of a horror story about the British tax system. Dan.
Thank you, Robert. Gosh, I don't feel I'm active in politics at all. And if anything, I'd like to talk about the elements of tax that shouldn't be politics and have been created and in some respects broken by politics. These charts, I think, show that. So, until the budget, a single earner with 3 kids faced a marginal tax rate looking like this. Now, you can believe, I guess, that someone earning £50,000 should pay a 70% tax rate. You could believe they should pay a 20% tax rate. Those are logically coherent thoughts. But the idea that people earning between £50,000 and £60,000 and only in that level deserve to have a 71% marginal tax rate is absurd. Is it possible to stop the echo that we're getting? I feel like I'm in a cave. But that is what happened as a result of the child benefit clawback introduced by Osborne. If you had 3 children, the high income child benefit charge claws back your child benefit, resulting in this monstrosity of a chart. And lots of people, including the CPS and us, have said this is a little bit silly, and to our surprise, we achieved a result at the budget. We now have a rate of a mere 58% at that point, which is, I think, one of the largest marginal rate tax cuts in recent British history. Still seems uncomfortably high. That was achieved by broadening out the clawback. So it's no longer between £50,000 and £60,000, it's between £60,000 and £80,000. The long-term promise is there will be a further reform, and instead of the clawback operating by reference to the highest earner in a couple, it will operate by reference to household income. Martin Lewis has been extremely adamant on this point. I think most tax people would agree it is a terrible idea. It was a feminist campaign for 70 years to end the idea that women are taxed as if their income belongs to their husband. This was kind of reintroduced that. It would mean that if a couple shack up, they'd have to disclose their income to each other, which feels like madness. So I very much hope that idea gets buried under a mound of technical consultation responses, and instead we see either a further broadening of the clawback zone, if we call it that, or preferably an end to this idea at all. I mean, it must be a better idea to have a universal benefit and then a slightly higher rate of tax to claw it back, rather than directly clawing it back, because that will always result in these cliff edges. Sadly, that is not the only cliff edge that we have. You can see the cliff edge on the right there, which is when the personal allowance is withdrawn. And again, you're certainly free politically to believe in higher tax rate for high earners. What I don't understand is how anyone can believe that people earning between £100,000 and £145,000 are in a uniquely evil position and deserve a uniquely high rate. That feels, again, incoherent. The answer, and it's a politically painful one, but I think logically inevitable, is that you end that clawback and instead have a slightly higher rate of tax on high earners, full stop. The challenge for those on the right of centre would be to accept that as the price for eliminating that cliff edge. Hello. So even this somewhat modest reform in the budget had a fair old cost attached to it, about 600 million quid. It does leave, though, a problem for graduates, because that 58% marginal rate, which is fairly high on its own terms, is then enhanced by student loans, which effectively add another 9%. It's less important for high earners because they will repay that loan over time, but for recent graduates, it does mean they're paying a rate of tax of around 70% in that zone. It's a really hard problem to solve. The student loan is, in essence, a disguised graduate tax, and that is a nasty chart. I don't have easy solutions. Maybe the other panel members are more imaginative than I am. But the worst and most dramatic feature of the income tax system is the recent creation of very generous childcare subsidies by the government, which could be worth as much as £20,000 to a couple living in London. The problem is that that £20,000 childcare subsidy disappears like that when you earn £100,000. Maths question, what marginal rate does that create at the £100,000 point? And the answer is that, a bit like, I studied physics years ago, but black holes are an area where the laws of physics cease to apply. There's no such thing as time and space in a black hole. There is no such thing as a marginal rate at the £100,000 childcare point, because when you go a penny over £100,000, that £20,000 vanishes. You are worse off. You don't become better off until you're earning about £145,000. That is an insane chart. I know people who are caught in it or have been caught in it on the less generous childcare schemes we had until April, which give you a version of that, but a gentler one. And their solution is the obvious one. They turn away work. They turn away, in one case, promotions. They make additional pension contributions they don't really want to make. How much revenue is the government really getting from this clawback? Unclear. But this seems a truly terrible feature for any tax system to have. Sadly, these cliff edges are not unique to income tax. Perhaps the most economically damaging is VAT. This is a problem that the Adam Smith Institute should get credit for picking up long before it was fashionable. Unfortunately, no one paid attention. In the intervening years, it has got worse. We have this dramatic precipice of companies holding back their growth before the VAT registration threshold, £85,000 before the budget, £90,000 after April. A cynic would say, this isn't real. This is just people evading tax, hiding their revenues, so it's bad for tax revenues but has no economic effect. But no, there is some fairly convincing economic evidence that this is a real effect and companies genuinely holding back their growth. Going on holiday in February or March, not taking on a partner, not expanding another shop, not taking on any apprentice, and so on and so forth. There's about 25,000 companies caught there not growing. Some of those might become large companies if they're allowed to grow, but they don't. The obvious answer is to increase the threshold. That answer is obvious and wrong because it's not solving the problem, it's just moving it. And whilst holding back the growth of small companies is a bad thing, holding back the growth of larger companies is a worse thing. The only real solution is to drop the threshold and drop it dramatically to the £30,000 mark we see in other countries. That is clearly politically hard. You could sugar the pill if you use the revenues that you got to drop the rate. Possibly that could take VAT from 20 to 18%. Would that make it achievable? See what other panel members say. Unfortunately, I do not think there is another answer. But yes, these cliff edges are toxic elements of the tax systems, introduced with the best of intentions, but I fear without really thinking about the incentives they created. Maybe on the other side of a general election, there'll be an opportunity to do something about them. Robert.
Well, thank you, Dan. That was comprehensive and scary. But I suppose, I mean, one of the problems is that doing something about quite a lot of these involves being nicer to rich people, which is not something that politicians are generally very keen on. But so each of our panelists will respond to that and offer their own thoughts. Sue, shall we start with you?
Yeah, sure. I mean, I don't have any prepared remarks, but just looking at those charts, I just wondered, I know this is a learned audience, but does anybody know their marginal tax rate here? So not, how much income tax you pay, but actually, if you went out and did earned an extra £1, how much of that would be clawed back by the system? Do you guys know your marginal tax rates? You know yours? You learn it? Fair enough. I would argue most people don't. And most people shouldn't. The basic principle is whether you believe, you should be taxed more on income or on consumption, or whether taxes should be higher or lower to pay for public services or to generate more growth. I think the basic principle, tax systems should be progressive. But as Dan pointed out, and Rob actually in his opening remarks, there are massive distortions, both at the lower end of the scale and at the upper end. I mean, the £100,000 problem, I also know people who are trapped in that 60% tax trap and have children. And you make hard choices because childcare, I was listening to Radio 4 today, I think it's about £16,000 to send a toddler to nursery every year. And that is not cheap. And if people are making decisions based on these, clawbacks, marginal tax rates, that's very damaging. And just finally, because I know you're not here to hear me speak, at the lower end of the scale, it's also very damaging. So again, at nursery, when I go and pick up my son, there are a lot of what I call 16-hour mums. So these people might be on universal credit, they're working part-time, and you get talking, and a lot of people say, it's not worth it for me to actually work full-time, because some of these people, because they have children, they get work allowances. And actually, once they earn over, I think, £12,570, their marginal tax rate is almost 70%. And I think when people have to think about, is it worth it? Should I, calculating it? Life is hard as it is, bring up children, etc. And when you force people to think about these things, I think that's very damaging, and it's keeping a lot of people out of work, especially when, we've seen over the last few years, I was looking this morning, the number of stay-at-home mums is halved from about 3.2 million to 1.6 million. So a lot of mums are working now, but a lot of them are choosing part-time. Some because of a lifestyle choice, that's fine, but others I know would like to work more, but they feel they're penalised for wanting to work, and that's not a good thing in my opinion.
Thank you very much. So, Richard, I mean, this isn't the OBR's sort of main area. This is as we were discussing earlier. This is pure IFS territory. So Stuart will dazzle us all. But obviously, this does have a knock-on impact on the economy and productivity and on the decisions people are making in their lives.
Yeah, that's right. And while we don't advise the government on policies, we do have to capture both the fiscal and economic consequences of those policy decisions. And obviously our fiscal forecasts capture the direct revenue that comes from any tax decisions, whether they be rises or tax cuts. But then our economy forecast also tries to pick up what are the behavioral consequences of those tax policy changes. And it is in the nature of taxation that all taxes distort people's economic decisions compared to what pure market signals would tell them to do. Sometimes that's in a direction the government wants to distort things. So you saw in this most recent budget 2 taxes which were designed to distort behaviour. You had a tax on vapes to try and stop people shifting from cigarettes to vaping as a way of both continuing to smoke while doing it more cheaply. And then you had a carbon border adjustment mechanism designed to discourage imports of carbon-intensive items as a way of encouraging other countries to start implementing some kind of a carbon price and meeting their net zero objectives. So I think there's the good kind of behaviour that you might want to incentivize through the tax system, which helps you realize broader social or environmental aims. But there are also the sort of unintended consequences of the sort you've seen here of attempts to either raise revenue or otherwise meet the government's financing needs, creating distortions in behaviour. And I think what we try and do when we put together our economic forecasts is capture, to the extent that we can understand them, how do different changes in the tax system affect people's marginal choices in the labour market, but also those of businesses. And I guess what we also try and do is draw attention to not just what announcements is the government making on the day, where obviously this budget was full of headline tax cuts to NICs, as well as these changes to the child benefit taxation arrangements. But also, you can also affect behaviour by default. So the government has reduced national insurance rates by nearly 4p now over the course of 2 fiscal events. But what they have also done is left tax thresholds unchanged in the face of higher inflation. The net effect of that on people's personal behaviour is complicated to model, but we actually model it with the help of work that the IFS have done in terms of what the impact of tax changes on people's marginal incentives is. And what you find when you put the whole sort of personal tax equation together is that the 2 big NICs changes that you've seen in the last 2 fiscal events, cutting the headline rate of national insurance on employee NICs by 4p, should, over a sort of 5-year period, get around 200,000 more sort of FTE equivalents into the labour force. Now, most of that comes from people working longer hours rather than people actually coming into the labour force. There are other things that government's doing to encourage participation in the labour force, but most of that doesn't come through changes in the tax system, because those largely affect people's behaviour about how many hours they work once they're already working, rather than whether they join or leave the labour force. About half of that is offset by a decision that the government hasn't made, which is to change the tax thresholds in the face of much higher inflation, which is dragging more and more people into higher marginal tax rates and also affecting the decisions that they make about whether to work additional hours. So you've got a sort of 200,000 FTE effect of the headline rate in the next cut. About half of that is offset by the fact that everybody else is also just facing higher both income tax and national insurance liabilities, because they're being dragged into higher tax bands at whatever the prevailing rate is. And so we rely on some pretty complicated labour market modelling to actually understand the net effect of all those changes. But you do have to look at it sort of in the round rather than look at any individual decision to understand what kind of choices it gives to people at the margin.
And just quickly, I mean, have you done modelling on how much it would cost, or what the impact would be of getting rid of some of these cliff edges?
I mean, we only model what the government gives us as policies, and we don't model alternatives. So no.
Shame. And Stuart, and obviously this is, I mean, the point Dan was making about the 100 grade drop off. That's all of this is absolutely core IFS terrain. But you guys have done more as much as anyone on that one to highlight the iniquity of those measures.
Yeah, sure. I mean, these are all things that we've been talking about for many years. Dan did a great job of laying them out. I think there are a few things there that I think are debatable. Nothing I think I would outright disagree with. But I think, the general points. I think that the general points were all absolutely right. I'm not sure I'd agree it was quite comprehensive. I think there are others that could be added to the list.
Go on.
Well, so to take one that's a small cliff edge but affects quite a lot of people is the marriage allowance, where you cross the high rate threshold and you can no longer get it, so you lose 250 quid overnight. One that affects far fewer people but is even more horribly designed is the tapering away of the pension's annual allowance, which affects far fewer people now that they've pushed it up the distribution so that it doesn't affect so many people, but that's still an awful bit of policy making. And then we could get into the joys of the Scottish tax system, which on its own terms, the Scottish marginal rate schedule looks insane, but not helped by the difficulties of trying to make devolved and reserved powers interact. So I think if I can depress everyone even more, there are even more problems than the ones Dan laid out. I think one thing to say is that we shouldn't assume that, well, this is just the nature of things, these are all inevitable. Almost all of these things are problems that have been introduced in the last 15 years. The tapering away of the personal allowance, the tapering away of child benefit, the marriage allowance, the tapering away of the pensions annual allowance, the free childcare cliff edge, the divergence between Scotland and the rest of the UK are all things that have happened in the last 15 years. It didn't used to be quite like this. I'm not suggesting for a moment there was ever a golden age where everything was wonderful, But we shouldn't fall into the trap of saying, well, it's inevitable and that, you couldn't possibly do anything about it. And to be a little kind of more positive, there have actually been a few small wins in the last couple of years where the system's actually got a bit simpler. I can think of the abolition of Class 2 national insurance contributions for the self-employed, which was just a silly relic in the system that we're getting rid of. The alignment of the personal allowance and the employee NICS threshold is a small step in the right direction. So things can be improved. I think, let me stop there and we can get into discussion.
Fair enough. Okay. So, and one area as well that hasn't been talked about is the interaction with universal credit, which obviously is. Richard sort of alluded to, but as people coming off welfare into work. So, one of Rishi Sunak's decisions as Chancellor, urged on by the CPS and others, was to lower the taper rate. But that is still a real impact here. So a question for the panel on the politics of this. That a lot of the things you were talking about there, Stuart, and as I alluded to, sort of were introduced by Tory government, but didn't want to seem too nice to rich people. That effectively, there's a sort of consensus that if we can't afford universal benefits, we should be restrict the restriction of child benefit, for example. If ever a chancellor is doing a budget, tax cuts for people earning 100k who are being treated awfully is not the most popular cause. But at the same time, when we did our initial work on this in a paper called Make Work Pay, we did polling and we found that there was enormous support for just the basic principle that whoever you are, you should never lose more than half of what you're earning in tax. That sort of you should always take more of every extra pound than a taxman, and that sort of feels like a fair system. Is the politics of this too difficult, or are there ways in which you can make this work? And anyone can answer who wants to, really.
I mean, it's unclear to me what the cost would be of abolishing the 100-grand cliff edge on childcare. The taxpayer response to it seems so strong anecdotally, but I'm not aware of any actual robust evidence into it. So it may be that it wouldn't be a very large giveaway to the wealthy. Don't know.
I think we did some modelling when Truss proposed abolishing the top rate of tax. If you got rid of the tapering but increased the higher rate of tax from 45 to 50, that sort of, it didn't quite even out, but it
oh, it's that expensive, is it? Wow. Okay.
I think, so I actually know the numbers on this, but they haven't been cleared for public release yet, so I'm not allowed to. I'm not allowed to tell you. I can say roughly, if you think in the order of, if we say something like 4 to 7 billion before behavioural response, and it might get a bit cheaper than that.
Well, what's that covering of the?
To just get rid of the personal allowance taper. So in some ways, the simple thing to do would be to say, well, rather than having a marginal rate that goes from 40% to 60% down to 45%, let's just have a 45% rate kicking in wherever is needed to make it revenue neutral, as say, it wouldn't be that much higher than the current higher rate threshold. So actually one thing you could do is just say, well, let's not have a separate 40 and 45% rates. Let's just make the higher rate 45%, have it kick in a bit above where the higher rate threshold currently does, and then just get rid of the complexities above that. Actually, if you had it kicking in roughly where the higher rate threshold is, you could also, that would be about enough to fund getting rid of the child benefit withdrawal as well. So you could simplify like that, but saying that the higher rate is going to go up from 40 to 45%, it would not necessarily go down well. There are lots of other things you could do. So, for example, rather than having this 60% band, you could have, say, a 50% band that's wider, and that could, go further up the distribution as well as going further down the distribution. And so you can, to some extent, tailor, well, who do you want to be better or worse off as a result of this. And for that matter, maybe you want a net tax cut or a net tax rise. There are ways to do it that will be revenue neutral, but that doesn't have to be how you do it.
Question for Richard, or Stuart may also have some. Is there a sort of, is there an optimum marginal rate? Is there a marginal rate at which you start to notice behaviour really being distorted, or is it just a sort of smooth continuum, or is there?
So it's not smooth in the sense that wealthier people have more choices about how many hours they want to work, and also when they get very wealthy, they have choices about how they want to take their remuneration, both in terms of whether it takes the form of income or capital gains, and then if they're particularly internationally mobile, whether they take it in the UK or in other countries. And so I think in that sense, tax policy becomes much more sensitive to behaviour the higher up the income scale you get, because people just have more choices. The lower down you are on the income scale, people have to work regardless of their marginal tax rate, because they've got a set of bills and necessities and essentials whose cost they need to cover. And so in that sense, and they also tend to have, they take their remuneration in much more ordinary ways, which is they take it as salary, they take it as earned income, and it gets captured quite easily by the PAYE system. Once you're further up the income scale, you have options around, if you're a professional, whether you incorporate, if you're internationally mobile, whether you're here in the UK, or whether you're resident,
whether you take pension contributions,
whether you take it as a pension, whether you take it as a salary. So behavioural effects start to matter a lot more at the upper end of the income scale. Toward the lower end of the income scale, what matters a lot more is interactions with the benefit system, because there tend to be steeper tapers and a combination of benefit withdrawals and rising tax rates, which can have big effects on people's decisions, both about whether they enter the workforce in the first place, and then how many hours they work before they start to bump up against the kind of allowances that you saw in Dan's presentation, especially around things like childcare.
Fair enough. It feels like from some of the noises, it feels like there's quite a lot of people who know quite a lot about this and will want to ask questions. So only one more question from me, which is, and Richard may have to recuse himself on this, but if you had, say 5 billion quid to spend, what would be what would be the things that you would absolutely prioritise on this? So what would the Telegraph readers get?
My instinct is that 60% tax rate, because it does fall in that £4 to £7 billion window, because the UK is increasingly reliant on higher rate taxpayers for income tax revenues, and people are making decisions not to work. People that I know not to work, or just because they're having families, and I think you shouldn't be punished for having children. And I think a lot of people that I know do feel that way. So I think that would be 5 billion well spent, in my opinion. That's just off the top of my head.
Well, so to some extent, I want to recuse myself as well, because part of the question as to what you would do with the money depends on who you want to give it to, and there are distributional questions there that are for politicians making value judgments, not for me. If you to say, of all of the things that, Dan and all of us talked about, which is the thing that really looks maddest to me, I'd probably say actually the childcare cliff edge at 100,000, because it is so big, and the fact that you are worse off earning 130 plus £1,000 than you would be earning £99,000. It just seems absolutely insane.
And another thing we haven't mentioned in this, but the CPS has done papers on all. I think we disagree with Dan on this. Is that it feels very iniquitous to us that if you as an individual earn £101,000, you are absolutely hammered in all sorts of ways. If you earn £50,000 and your wife earns £51,000, you have so much lower tax system. We are impinging on the decisions people make about how they structure their families, and as well as how they structure their childcare and their children. And this is although our friend Tim Loynig, who's not here, would say that you should structure everything so that everyone is incentivised to have part-time jobs, because he doesn't like the idea of people being full-time parents. But, Dan, so you're top of your hit list?
I'm going to cheat and give you two answers. So I think I agree with Stuart.
So you are learning to be a politician.
No, I'm giving you answers, I said. I agree with Stuart that it's gone now, but the 100 grand childcare, a cliff edge seems an understatement of a description. It is an abomination. There's no place in the tax system. And to say that eliminating that is regressive or giving money to the wealthy is the wrong response. If we have a tax on beards and we abolish it, the fact that rich people are benefiting is irrelevant. The tax was stupid. That is an equally stupid piece of politics, and it should go. My second top priority would be child benefit, where I have oversimplified, because it's not merely that by magic you end up with that 58% rate. It happens because of the high income child benefit charge. So if you are, like most people, an employee on PAYE, you don't file a tax return, you claim child benefit, you're in that zone, well, you have to file a tax return, you have to declare. And if you don't, you'll get a penalty. And if you don't for several years, you'll get a large penalty and a large retrospective tax bill. This is a terrible piece of tax policy, and it again should go, and questions about regressivity I think are less important when you have a tax which is unfair and inequitable in how it operates.
Thank you, Dan. So let's move to audience questions. Vincent has a microphone which he can distribute, because I should have mentioned we are being streamed online, so please don't say anything that you wouldn't want to the millions that are watching.
It's too late, Stuart. You gave away their IFS's secrets.
So the gentleman there, and then gentleman in front.
I'll wait until I got the microphone for the millions. First of all, excellent panel. I love that everybody's agreeing broadly on the darkness of some of these things. I want to speak out for the millions, not in the tens of millions, but in the millions who are actually self-employed or operating as limited companies. Behaviorally, we saw a big drop, anecdotally and beyond, in entrepreneurial startup activity, and I don't mean tech startups, regular businesses, from people who dropped out of non-PAYE employment to get the safety of jobs because the Chancellor gave them nothing in the pandemic at all. There's a cliff edge at around £60,000 of revenue, where once you pay the $9,000 in salary, which HMRC basically advises you to do, and the rest comes in dividend, the cliff edge is 60.25% at around 60,000 in revenue. That seems dark, but it's never spoken of by policy. I never hear it spoken of in policy areas. It's 60.25% because you're paying 26.5% marginal corporation tax and 33.75% higher dividend tax, and that's the way you're advised by HMRC to structure your business. But to counter my own statement here, just to bring it forward in the room, behaviorally, it might be a good thing. Because if you're looking to expand your very small business, you look at what your incentives are. Your incentives are hire a second person and pay them. Because if you're only going to earn 39.75% on everything over 60,000, maybe you should expand your business and look to grow and drop your corporation tax profits. So it's not a question for the panel per se, although I'd like to take on these several million people who are being dropped out of, who are being pressured out, and as a legacy of the stuff from maybe 15 years ago and earlier, are regarded by the PAYE population, which might involve quite a number of people in this room, as tax dodgers.
Anyone want to go on? I mean, I have a theory which I bore people about called the database state, which is that if so many government decisions are basically made because of access to whichever databases they have. And the thing is, the Treasury has a database of people who pay PAYE, and it's easy for them to give stuff to those people and to do stuff for those people. And it likes people paying PAYE because they fit neatly within the boxes. But that may be unfair to self-employed and businesses. Dan, you look like you had views on that, or?
I think there's been chaos around the position of people incorporating in small businesses, where over the last 20 years there have been 7 or 8 moments at which the basic economics of that has changed dramatically, sometimes deliberately, sometimes not. And where people have ended up is not at all, I think, the result of engineered policy, but the result of accident. I don't know what you think, Stuart, in terms of the marginal rate they face.
It's certainly all over the place. I'm not sure it's quite accident or quite engineered policy. I think what you got is a government that's basically trying to set tax rates on capital income in general and income from businesses in particular as a sort of constant compromise between, on the one hand, not wanting to discourage saving and investment and entrepreneurship and therefore wanting low tax rates, and on the other hand, not wanting to open up scope for tax avoidance and make it easy for people to sidestep tax just by changing the legal form of their income. And as concerns over those two problems ebb and flow, what you've had is that the tax regime sort of ends up yo-yoing in the middle. Now, I and colleagues have come up with suggestions where we think you can actually have your cake and eat it on that one, but maybe a longer conversation for another day.
Or the radical take, which involves no one having cake, is to follow the US approach, where a typical small business would not be taxed as a company at all. It might be a company, but for tax purposes, the company essentially doesn't exist, and the individual is taxed as if it was their income. So they get all the juicy benefits of incorporation, but the tax is kind of straightforward, and you can't avoid tax. And you don't force people to do that literally, but you ramp up the marginal rates, so you're effectively forcing them to do it, and maybe that would be a happier and simpler outcome.
But I mean, Sue, as you work in newspapers, I've worked in newspapers. People who are self-employed do feel aggrieved and are very vocal about that. It's fair to say,
and rightfully so. And we don't cover these issues as much as we should because, yes, I agree. We write for our audience and we write for the consumer, but these cliff edges do exist both in the personal tax system and my other half is self-employed, so January's maximum stress for him. This is the file, this and that, and with all the different changes to dividend tax rates and this tax rate, so I've had a front row seat to all of that too. But perhaps it's something I should take away in my notes today.
Richard, I mean, anything on this, or is that?
One thing that complicates trying to understand just how much money you're going to raise from a given tax change is understanding how what you do in the personal tax system interacts with people's incentive to change the legal form in which they're working. And so we are always asking the question, not just the government's doing this on national insurance, but what does that mean for people's incentives then to stay in the national insurance system and stay in the PAYE system rather than incorporate going forward? Because there's still a reasonably strong tax incentive to incorporate because the rate is lower. But at the margin, there are people who might make different choices now that NICs are going to be a bit lower. So you're always trying to think not just about what is the sort of static direct yield from this tax, but what incentives is that setting up for people who've got choices at the margin about how they.
I mean, I should confess, I am paid by POE, but I also have a company called Colvile Limited, which is very imaginative, and
we'd never find
and chose to set it up at precisely the moment it became a really bad idea to set up your own company. The gentleman in the front row, and then Phil.
I was going to talk about some of the numbers involved. I mean, if you get rid of that personal allowance clawback over 100,000, that affects about 800,000 people. And many of those, of course, are earning or have total income well in excess of 200,000, 300,000, that sort of thing as well. If you do something on the child benefit, high income child benefit, the last figures I saw from HMRC was that something like 630,000 households didn't claim the child benefit, and about 350,000 actually paid the tax. And changing the threshold as they're doing takes 100 odd thousand out of that calculation. So you're not affecting a lot of people with those quite expensive things to do. I completely agree with everything you've said about tax-free childcare and free nursery places, but do we know how many people are infected by all of that? Because that would seem to me, if it's 10,000 people, the trouble is this room will probably know a greater slice of them than average.
It's too early to say, isn't it? We don't know yet.
If it's 200,000 people, then it's a really huge problem. So trying to get the numbers would be really helpful.
I presume it's relative because only if you've got children between 0 and 5 and you're only over 100,000, most people are quite young younger children 0 to 5, and therefore even people are going to eventually earn over 100. So I mean I'm not an expert at all, but my guess would be the numbers would not be that great affected by that, but that will have a very big effect on those people who it affects. But
Yeah, but I don't think we know the schemes are too new.
Well, no, in terms of how many people are affected, we know how many people are above the different income levels. One thing we need to be a little, well, with that, yeah. I mean, one thing we need to be a little bit careful of here is when we say the number of people affected, there's a difference between the number of people who are in the band where the marginal rate is high and the number of people who are affected, because they are above the bottom of the band. So actually, if you take your example, Bill, on the personal allowance withdrawal, there's maybe 700,000 or 800,000 in the band of between 100 and 125,000 where the marginal rate's 60%, marginal income tax rate 60%, but there are another million plus above 125,000. So actually the number is the number who are affected in terms of having to pay more tax is quite a bit higher than that. The number facing a high marginal rate isn't quite as high.
What about the number just below it, where they're affected by the incentive?
Again, the distribution kind of gets denser as you go down this real off order.
With a spike at 99,000, 98,000.
No spike.
Don't show that there is a huge number of people in the sort of 95 to 100,000 bracket.
There's a little bit of bunching at that threshold. It's not a huge amount, and quite tellingly, the bunching is a lot among company owner managers who can pay themselves in dividends in a certain year, in certain years, and then choose to take it more dividends in other years, or just wait and get capital and pay capital gains tax when they sell the company, and that kind of thing. To a lesser extent, you see it a bit among the self-employed. There's almost nothing among ordinary employees. And one thing, again, in terms of the numbers affected, this is also where it really comes home to roost, the fact that a lot of these thresholds, and again, a lot of the things that have been introduced in the last 15 years are just frozen by default. And people have rightly started paying more attention to the 6 year, I think we're up to, is it? Freeze in income tax and national insurance, and for that matter, others like inheritance tax thresholds that's been in place. But a lot of these newer features of the system, like the point where the personal allowance gets withdrawn, like the point at which child benefits starts to get withdrawn, are just frozen by default. It wasn't even an announcement that we are going to freeze them. And so actually, so things like that personal allowance taper affects far, far more people than it used to when it was introduced.
Phil Aldrich. Anna, yeah.
Thanks. Phil Aldrich at Bloomberg. Both parties are really focused on growth, and one of the obstacles to growth they both identify are these kind of cliff edges, which are disincentives to work. And we've got 70% marginal tax rates at very low incomes because of the benefits, taper, etc. And then we've got these enormous ones at 100,000. So pound for pound, if you were to choose, Richard, you said 200,000 people have been brought back into the workforce through the 20 billion of NICS cuts. So, pound for pound, if you have 20 billion to spend, is that the best place to spend it? If you actually want to get growth incentives, if you're trying to drive growth, where do you put your money? I guess it's mostly Richard and Stuart who've done this.
I think I get a joker on questions about what would you do. I mean, I can say what governments have done.
Okay. Of the multiple measures the government has asked you to cost, which has the greatest growth multiplier?
So I think it partly depends on whether you want to make a small difference to a lot of people or a large difference to a small number of people.
So the biggest growth is so it's the GDP. Yeah. That's the measure.
I guess that's precisely the question, which is you can make the NICS cuts made a small difference to a large number of people, but the high income child benefit charge change made a big difference to a relatively small number of people. So there's 30 million workers. The NICS cut got 200,000 FTE. The NICS cuts got 200,000 FTE into the workforce. That's not bad going. The higher income child benefit charge affected only 170,000 people, but it got 10,000. But it boosted FTEs by 10,000. So that is a relatively big return that you're getting on a tax change for a relatively small number of people, because that's a big effect on their marginal tax rate. So I think it does really depend on whether you want to have a broad reach, but make a small difference, or whether you want to make a big difference to a handful of people facing very, very high marginal tax rates.
But it's not like the transport thing where you have a multiplier against every measure.
Well, these things, because they affect the labour supply, these things are making, tenths of a percentage point difference to the size of the labour supply, but that makes a difference over time. So these are making 0.2, 0.3% on the level of output in 5 years' time. It's not a growth transformation, but it is a meaningful difference to the level of output in 5 years' time from what are, small but significant changes to the tax system.
Stuart, what would be your growth maximising?
Well, I'd sort of stepping back that a lot of what I think we could do for growth in this country has nothing to do with tax policy. There are all sorts of other areas of policy that we could look at. Even within the tax system, the areas I'd look at first probably aren't actually to do with the personal tax rate schedule. It's things like stamp duties are absolutely horrendous, and we can think about there are structural features within corporation tax, and we've got to get really obscure things to do with the VAT treatment of financial services and things like that actually I think are more damaging than any of the things we've been talking about today. I'm not sure there is one that I could pick out of the things we're talking about. As Richard said, it's partly about making a big difference to a lot versus small difference small difference to a lot versus a big difference to a few. And again, it does partly come back to which parts of the population you want to help, and growth is not the only measure we should address. But again, if you say it's really the same question we had before. If you say which of these do I think is doing most damage in bang per buck terms, probably actually the childcare cliff edge at 100,000. But there are features of benefit withdrawal, the interaction of taxes and benefits that are really very problematic as well.
Yeah.
Again, we haven't started to get into the details of any of that.
But UK hospitality will tell you there are actually now more people working in hospitality than there were before the pandemic, but there are still a huge number of vacant jobs, and that's because people are deliberately curtailing the number of hours they are working. I haven't looked at it. I'm taking that on trust from their statements, but.
I get a lot of anecdotal reports, hospitality, but also hospital consultants who are right at that £100,000 point, but doesn't seem that visible in the data. Maybe it'll become more visible as the
Whereas the pension thing really was.
Yes.
Yeah.
Airline pilots as well can do shorter shifts, I've heard.
Yeah. Now it's possible that this is a real effect, and it's big enough to be real for the industry's concern. Healthcare is an industry, but not big enough to appear in the data. It's possible there's some other subtle reason I'm missing why it's not in the data, but you don't see the little bump, as Stuart was saying earlier, in employees between 95 and 100,000.
There are other ways that you might see it in data. I think bunching at thresholds gets a little bit misinterpreted, and it's not a great measure of how big a distortion something's causing.
VAT is maybe unusual for how dramatic it is.
Yes, it as much reflects the extent to which people can fine-tune their exact income or turnover or whatever around a threshold, as it reflects the underlying behavioural response to bigger features of the system.
But one thing to just add on this, of course, it's not just about tax as a monetary thing. VAT is a classic example of tax as an absolute bloody nightmare to do. We did some research on this where we sort of asked people, what do you hate more about the tax system as a small business, the tax or the administration? And it's actually pretty much 50-50. There's quite a lot of people who would be willing to pay more tax if it was just an automatic process, as opposed to the VAT regime is uniquely hard to get your head round compared with some of the other aspects.
But it shouldn't be. In the modern world, VAT for a coffee shop should be an extremely simple thing. Their point of sale has the VAT output, the amount they're charging. Their accounting system, complex or simple, has their expenses, set one against another, account every quarter, job done. Why is it hard? In practice, it's clearly not like that.
But you've got to take in and eat in and take away.
Yes, is this cafe selling hot or cold takeaway food and all of this?
No, my cafe did not, Stuart.
So yeah, Dan.
isn't one of our worst problems that we are the most centralised of all the democracies? Whatever your taxes call, the whole lot go to the Prime Minister, the Chancellor, and half a dozen others to do what they want. Wouldn't we be much better off if we had a degree of devolution, like other democracies, and if perhaps we had particular taxes for particular purposes? Right now we've got what we call national insurance, but it's not that, it's a backdoor income tax. Isn't this really a bad mistake that Britain alone makes?
Interested in any answers to that, and also actually in any what are the countries that do this better?
But devolved taxes are a dangerous thing. So Scotland recently increased its top rate of income tax to 48%, I think. Of that increase, how much of the paper increase do they think is going to be collected in actual tax, and how much will disappear due to taxpayer response? And the answer is that 80% disappears. It is a truly valiant experiment on the behalf of the Scottish Government to find out where the Laffer curve is in Scotland, and economists everywhere should thank them for it. So, no, devolved taxes on stuff that moves, like people, like coffee, are, I think, a very bad idea, and the Scottish Government is going to discover that over time. Devolved taxes on stuff that can't move, real estate, sure, experiment away, why not?
Although the CPS loves the idea of devolved taxes on things that can move, because then people move to low-tax jurisdictions, as we see in American states day by day.
In a previous life, when I worked for the International Monetary Fund, I used to advise countries on fiscal decentralization, and you would always show these comparative graphs of how much tax is raised centrally versus it ends up in central government versus is retained by local government. And the United Kingdom, you're right, was always at the far extreme and would be eyed very enviously by finance ministries all around Europe as being a place where tax arrives and stays rather than in other countries. I think the challenge that I think Britain has in particular is that it does have some decentralized taxes. It's got council tax. It's got business rates. I think a particular challenge in the design of those taxes is that they are not very buoyant. They are based on property valuations which don't change, and they're based on the size of business premises, physical business premises, which is also not something which is keeping up with the way in which people shop and live their lives. And so I think it's a particular challenge in the UK that not only are we very highly centralised, if you care about fiscal decentralisation, but that also the tax bases for those things that are devolved are not keeping up with growth in other things in the economy which are being taxed.
We've got we're technically out of time, but we did start late, so if we can take all three questions in a nice diagonal line, and then everyone can answer as many of them as they can.
I was really just wanted to say, I think that the publication of these details from the IPPR, which you said about how you're going to publish things on the costs or savings of these various cliff edges, would be very, very useful, because it would enable the punters, the voters, to actually then lobby before the election, as to say, well, look, this is such an anomaly, and it's only going to cost you, or is going to cost you X or Y. It makes it possible for everyone to have a view on a menu, because indefinitely there is obviously the cost is going to be prohibitive for some things and not for others. So I really look forward to seeing it. I presume it will be published in a sort of full document, will it, or is it work you're doing privately? So I suppose that's my question, but my comment is bring it on. And my other comment would be that I don't think you should discount, economic growth, yes, but I do think this is much more visible to the public than some of the other rinky-dinks that might help on economic growth. And it's becoming increasingly visible because more and more people, if they're not actually affected by it, are seeing, goodness, I only have to get another promotion and I will be affected by it. And iniquitous side effects such as huge penalisation on people with large families, where the marginal rate is even higher if you've got more than 3 children than what you illustrated on the child benefit thing. Thank God that at least they did something about that. So, sorry, those are comments, and I know it's against all rules. And
it's fine. To the lady in front of you, and then
maybe I could just still respond to the comment.
Hi. I should say that I work for Money Saving Expert, and so I'm interested in the high income child benefit charge discussion that we were having earlier. One of the main concerns that we've heard from people is single earner families, in particular people whose partners may have sadly passed away, and so they need to earn more, so they're dragged into the higher threshold. So I was just interested in your thoughts on how you would, what your solution to that would be if not household income. Thank you.
Yeah, and then the gentleman in front.
In terms of the interaction between politics and money and taxes, one group that doesn't seem to be focused on at all are students. Now, I mean, there's about 4 million of them, and in a time of higher inflation, the only income they have, generally, unless they've got very rich parents, is the £9,250 a year that comes from the student loan company. And that is, there is so much like poverty now amongst students because they have not got enough money on that fixed rate for 3 or 4 years now, and it's halved the value of that 9,250 over the last 10 years. And the knock-on effect of that in terms of how people react to it, it's the 8 million parents, in many cases, that have to make adjustments to increase the incomes of their children who are students. And I bet that's not in your budget responsibility calculation.
Any concluding remarks as well?
I think it's a good point, and I think the student loan system is setting up all sorts of interesting incentives, not just for students, but also and disincentives also for universities. I think it's also changed quite. It's been changed by successive governments, and so I think another challenge is that I think students probably find it quite difficult to understand quite how much they're going to be repaying later in life, because the terms of these loans are constantly changing. Their income contingent, the interest rates are always changing. So I think also the terms of the loan that they have taken out is not entirely clear what they have committed themselves to for the rest of their working lives.
Marginal rates there can be 17%.
Sue, anything on any of the?
Yeah, I mean, just on publishing cliff edges. I mean, the book would be probably thicker than War and Peace. I mean, Dan had 3 charts, but whether you have 1 children, 1 child, 2 children, 3 children, whether you're a graduate, whether you receive UC, that all affects your marginal tax rate. So I don't know who's going to have the task to publish all the different permutations on that. Just being a student, yeah, I guess I was a student in London, and I guess the costs were very high, and I don't know, just on a personal level, I had to move back home for the 3rd year. So yeah, but it's part of being a student that you learn to become a money serving expert, right? And you learn thrift, etc. I mean, just on the the choices in terms of ironing out some of these kinks in the system, I think there are contentious parts whether you're at the top end or the bottom end. I mean, arguably, there might be one more fiscal event before the next election. Would Jeremy Hunt want to have, if he only has 5 billion and, money is tight as we know, is he really going to give it to the, 100,000 plus earners, or will he choose to, give a little away to a lot of people as he has chosen to do in the last 2 previous fiscal events? At the lower end, I guess you could either increase work allowances or lower the taper rate, but then that also allows people to earn more and more money before they stop earning universal credit. I think even at the moment you can claim universal credit if you earn over £100,000 in certain circumstances, if you need help with housing and childcare costs. So there are contentious points either way, and as you say, these things were introduced in the last decade and a half, and there does need to be some ironing out, but there is a lot of work to do as well.
Stuart, everyone seems to want you to publish this.
Yeah, I should possibly manage expectations down a little bit. Well, I'd say a lot of this stuff is published. A lot of it's published, by the government, is online. A lot of it's stuff that we put out. Dan's put a lot of good stuff on his website. So I'd partly just say, go and have a look and make sure you're looking at the right website. I should clarify, I'm IFS rather than IPPR.
I was going to say.
Website. This was just the one particular number around the tapering of the personal allowance doesn't actually get published, so we kind of went and looked it up and getting that, and it was actually just intended for a presentation, some internal modelling we're doing, but I don't know quite what we'll do about publishing it, but most of these things are published and are out there. High income child benefit charge, I think actually there are arguments as to whether individual or joint assessment is the right way forward. I think there are legitimate arguments in both directions on that. I think the current system, which is a sort of hybrid of individual and joint assessment, is pretty much indefensible. What would I personally do? I don't understand, and actually the change to assessing, the proposed change to assessing child benefit on joint family income makes it more explicit that with what used to be child tax credit and now the child element of universal credit, as well as this, what we now have in effect is two different child-related benefits that are both means tested, but means tested at different levels of incomes and with different administrative mechanisms. And that just seems crazy. What I would do is to say, let's go back to having a system where you've got a universal child benefit and a means tested child benefit, now the child element of universal credit. And if you decide you want that mix to vary and you want more support for low-income families and less support for high-income families, then make child benefit a bit lower and the child element of universal credit a bit higher, or you can go the other way around or whatever. But having two separate means-tested child benefits with two different administrative mechanisms just seems absolutely crazy to me, aside from where I wholeheartedly agree is the administrative nightmare of trying to do joint assessment through the tax system again. On students, I agree they are having difficulty. Again, we have this problem that things don't get indexed automatically to keep up with the cost of living. One thing I would mention, not disagreeing with anything, but one increasingly important source of income for students is work. And the proportion of students now who take jobs alongside their study is unrecognisable from when I was a student, where, a few had a bit of bar work and a few had a bit more than that. But now it's actually quite an important part of student life.
Dan, any thoughts?
Yeah, I think with the high income child benefit charge, when something is indefensible in its current form and all the solutions for changing it are equally indefensible, that is the university's way of saying that it needs to be abolished. And I think that is the only answer here. There's a salutary lesson in the dangers of intuition with all of these thresholds. That if you say to someone, is it right that someone earning £100,000 should get a personal allowance? No, that feels wrong. Is it right that someone earning £50,000 should have child benefit? Is it right that someone earning £50,000 should have universal credit? There's an easy answer which is say, no, of course they shouldn't. But then once you proceed down that line of argument, you're creating a cliff edge or a taper and a high marginal rate. There's no other outcome of that way of thinking. So again, the answer is to not adopt that way of thinking, to accept the universality of benefits, fix it by fiddling. And Stuart's suggestion is a great one. You could imagine freezing child benefit for a few years and letting the child component of universal credit creep upwards, and that would slightly reduce the costs. But let's stop introducing cliff edges because they feel like neat political solutions.
And one final, I completely agree. One final contribution from me, just on the single and a family point, which is obviously it's something I feel quite strongly about for personal reasons. It is very striking, irrespective of the HI's, the high income child benefit charge. We do much less income splitting than any other Western country. I mean, this may have been a great feminist victory, but it's not one that any other country has followed us down the road of. In Germany, households can split their income. In France, they have a thing called the quotient familial, where every adult is one share, every child is half a share, and you add up your total tax bill and you divide by that number. So they make up for it by charging all sorts of high taxes in all sorts of other ways. But if you are a young family in France, single or dual earner, you actually have sort of really good tax rates, and that's one of the reasons why French people actually have more kids than us, as well as the fact they actually built some houses at some point in the last 50 years. Thank you so much all for coming, and thank you so much to our panel, and thank you to Dan for organising this, and hopefully we'll see you all again soon.
It was you guys that organised it. I think it makes sense.
Yeah, it was your idea.
Ideas are easy.